Yeah, and clearly you're seeing this. I mean, investor sentiment is clearly boosted with this. I mean, you're seeing this in the stock price today. People really like to see him brought back in, and the stock has done really well under him previously, and I think you're going to continue to see that moving forward. Their valuation has come down so much from where their highs were. So yes, it is still a little bit more expensive than where the markets are, but I do think that it's started to become really attractive here, and especially when you look at things like ESPN, I think is really one of the big things they need to figure out, and if they can bring some profitability there. The question is, do they do anything with sports betting? I know that's really been discussed about. But if he starts to really bring up any of this stuff and can fix those things, I think that's really only going to be a benefit for Disney.
Seems like one of the big problems, Guy, in the latest quarter was that $1.5 billion loss in Disney Plus. And can Bob Iger do anything to change that? I mean, he can cut spending, but then will you have the content needed to have that streaming service?
Or acknowledge that it's a loss leader, and Tom Rogers is going to come on, so I'll let him discuss that. But he's a robust 71-year-old guy, soon to be 72. He looks like he's in his 50s. He, as Dan mentioned, I mean, he was the architect of so many great things. And my sense is, instead of trying to fix things that might be unfixable, he'll try to figure out ways in this new world, and I think he'll succeed. The question really comes down to, and Tim alluded to this, as did Courtney, do you want to be short a stock that's trading at 18 times next year's numbers, which is historically cheap to itself? A stock that also just traded down, I think, on November 9th to 86 and change, which sort of mirrored the lows we saw in March 18th, 19th, 20th of 2020, and has some upside now with him back in the role. So I'm not saying you necessarily have to go out and buy with both hands, but if you've been in short and enjoying the ride down, I think you absolutely have to cover, given the news we just heard.
Let's say you're not short and you're not in the stock. Would you buy here, Tim?
Yes. Yeah, I think the valuation is compelling, and I'll just say that I've been nibbling small around these levels. So I've owned it higher, I've owned it lower. But I just think that the story, I believe that the streaming tailwind, this secular dynamic, that all we do is talk about, all we have done is talk about, unless we're going to revalue everybody. And I think media stocks have been destroyed. And I think they've been destroyed for cyclical reasons that on some level, I think they've seen their worst pricing in, as opposed to companies we think have credit issues and things we haven't really seen yet. I think on the media side, we kind of get the sense, and people sold first and asked questions later. I think Disney had a lot of that. The losses in their streaming business are things that are challenging. They're not going to change in the short to medium term. And this is a company that, if anything, people are questioning whether they're about to start cutting costs and doing this. And I think, maybe, if anything, maybe Bob Iger puts some of that on hold, believe it or not, because I do think it's you need to send the story that this company is ready to do what it takes to beat the leader. And I think they're going to do that.
Is streaming really a tailwind with a $1.5 billion loss in the last quarter? I mean, that's what punished the stock. So I understand that maybe in the future it's a tailwind, but right now, isn't it the biggest weight around Disney and its valuation?
Sure, but I mean, we're going to start to see incrementally smaller losses, right? And that'll be part of the story. And then you kind of get the leverage on this massive catalog that they've been building and spending on. So to me, I think it's kind of interesting. I'll just say this: as you look at today's gap on the opening, filled in that gap from earnings, where the stock was down more than 10%, was trading very near a 2-year low. If we look at the COVID low in March of 2020, it traded about $80 or so. Prior to that, and we were saying on the show, I thought it would be a buy somewhere with an 8 handle, and it was. But here's the thing, and especially if you think, I don't like the market action here at all, and even with this news, it'll be interesting. I think the stock will go back and retest those lows, not only a couple of weeks ago, but also the other lows from March of 2020. And I think a lot of stock, I think the S&P is probably headed back towards the lows at some point over the next few weeks to few months or so. So this stock will not be immune. And to Tim's point, I mean, Iger's not going to do the things that the analyst community, they already have the buys on the stock. They're not like lowering their ratings now that he's there. And now investors who've been patient and you're sticking around here, I think you probably have to give them 2 years.